All right, guys, we have quite a lot to talk about because we've seen quite a big reaction over the past few days. So we spoke last week about this Bitcoin rejection, and what we've actually seen is Bitcoin coming back inside the channel that I highlighted on Thursday's show. So in today's video, I want to talk on, I guess, a topic that has started to crop up on X, which is, has Bitcoin and Ethereum put in their local top? I'm even seeing some people saying that they've put in their cycle top. Although maybe cycle top is a little bit extreme, I do think there's some validity in a cooldown here, and I want to explain what I've actually done in response. So later on in today's video, I'm going to talk through some of my portfolio positioning changes and give you an update on that front, give you an update on some of my trades. I just opened a new trade actually before the video, so I want to run through what that is. And also give you just, an overall update on the market and my thoughts right now. Going to be a short, concise, and alpha-packed show. So let's get straight into things here. Looking at Bitcoin, you can see it's a channel. It's quite interesting. It's actually following this like descending channel here. You can see we've had a reaction of this mid-range zone. We ended up rejecting at the H4 money noodle. Coming up, we've now seen a bit of a reaction. Spoiler alert, one of the trades later in this video is actually a long. It's not on Bitcoin, it's on another coin, but corresponding with this level here. So this was a level that I bidded because I think that this is the level to expect a reaction potentially for a push up to the top of the range here. And then the big question for Bitcoin is going to be, can it make a higher high? Because this is looking like, I guess, bearish PA now that we're back in the range. And, until we clear back above and hold above the H4 noodle, there's potential that we come back down again and make a lower low. So Bitcoin looking like it's going to take a little bit more time here, and I think that's also being driven by the fact that sailors buying has slowed down. The market's anticipating that, and the market is still waiting on the trade deal news as well. So that's what's happening on the Bitcoin side, just really charting it like this, and it's back within its horizontal range as well. So really just stalling for the time being. On Ethereum, it paints a slightly more bullish picture. Of course, this is the weekly chart, not the H4. I'll go down to the H4 in a second, but looking at the weekly chart, it's still above the key pivot point that we've been discussing at $4,000. So as long as it's above, honestly, I think dips are for buying in general on Ethereum. But obviously, if you start to go back down to like the H4, you can see that it's also started to flip momentum a bit. So it was holding above the noodle since the 5th of August and is now retested and is now tucked back in below, potentially confirming a bearish retest here. If we did get a sweep back down to this level, 4,000 would be an absolutely amazing level to bid, in my opinion. However, I did bid Ethereum a little bit today, considering we are at this demand cluster here. You can see this is a big point of interest for Ethereum at 4190 to 4279. So this is also a level to expect a reaction. So the TLDR on PA for Bitcoin and Ethereum is that they both reacted to support zones. What you want to see is actual follow through. So that would be represented by Bitcoin getting above that channel high that we discussed at the top of the range there, and then Ethereum getting back above the H4 noodle and starting to get above this cluster again. So that's what you want to keep your eye out for. It's been a pretty busy couple of days on the trading front. I'll update you on exactly what I did later in the video when I go through my positioning. Bitcoin also looking a bit weaker due to the stock market compared to the stock market. You can see Bitcoin down today. Stocks were up during the Asia session as well. I noticed Asia's actually been quite strong in recent times, but the Asia session was down for Bitcoin, but up for equity. So just starting to see a little bit of a cool down and a bit more risk off in the crypto market, which honestly makes a lot of sense considering we've run up a lot. And like, I know it's easy to look at the, H1, H4 and be like, oh, this looks, horrible. But I mean, going to the weekly, things are still really bullish for Ethereum, and alt's actually held up okay. Like, even if you look at, the total 3, total 2, like this isn't a huge drawdown. Alt actually did hold up okay, and even the Ethereum alt BTC pairs look okay, although they went slightly down. You can also see this with dominance as well. Like, dominance didn't really have a huge uptick. And it's interesting because when we've seen these sell-offs in the past, typically dominance would go down would go up a lot higher. So when alts have sold off, they've sold off a lot harder than Bitcoin when the market has had these sell-offs. But this time, Bitcoin dominance actually didn't really have a massive uptick. Like, it's still looking relatively bearish. So I think that is the silver lining in all of this for altcoins, is that, okay, the market is stalling a little bit, but alts are actually showing decent relative strength. So for me, that does say a lot, and that's why overall I think dips are still for buying, but I'll get into the nuance slightly later in the video. By the way, if you want regular updates on this stuff, I just want to remind you that I do have a free Telegram where I updated on my positioning, as you can see on Friday. On Friday, I had a show with Jason, so I wasn't able to share my market thoughts, so I dropped it in the Telegram. Also dropped updates throughout the weekend when I'm not doing market shows here. So if you want a daily report every single day with what I'm doing and just a rough overview of the main things you need to know that day, make sure you do join the Telegram. It's free. There's a link in the description below, and that'll make sure you get the distilled information. So everything that you need to know every day, because I know X is pretty crazy, YouTube feeds are pretty crazy, so I want to do my best to distill that information for you guys. If you're in the Mars High Club, obviously that's still my number one place where I answer questions and give all my new alpha and trades up front. Mars High Club is my biggest and best offering, but the free Telegram is just a nice little package for people that want daily updates without the noise that comes on other social media. So make sure you join the Vault. That's the name of the group. Been updating throughout the weekend when I wasn't making YouTube videos, but obviously now we're back with the Monday to Friday market updates. So in light of this sell-off, there has been a bit of discourse on X I've noticed starting to crop up about the market shifting. Gold here says, feels like the market shifting. Multi-billion liquidations. All it did was stall downside momentum for a day. The big August 12th ETH candle has completely retraced. Big rejection off the 124K for Bitcoin. Honestly, today could be the day where I take the rest off the exchange. So, gold was de-risking. Victor here says he's frustrated that he didn't de-risk enough. So people still have a lot of PTSD. This isn't still the classic regime of every dip's for buying. I think people are still really, really scared about a top being in, and that's preventing, a lot of people from buying this dip, which is actually quite interesting, because if we really were in the euphoric stage of the market where everything was, super bullish, and we were really in that final 10th of the altcoin run, that crazy period in the market, people would be begging to buy dips. I mean, that's pretty much how it was last November, December. People were buying every single dip until the Trump coin launch in January 20th, pretty much. So it was 2 months of people were desperate to buy dips. But every time there's a dip now, everyone gets really, really scared, which is a sign to me that the market still isn't in euphoria mode. When the market's in euphoria mode, everyone wants to scoop up every single dip imaginable. So overall, although it does look like momentum has stalled for a bit, and I'm just taking it day by day. I'm monitoring the PA. I'm trying to be really level-headed about it. I still think from a midterm, short to midterm perspective even, but especially from a midterm perspective, the market still probably hasn't put in its ultimate high on Bitcoin or Ethereum. Obviously, we'll pay attention to the charts and see what the charts say, because that is going to dictate the momentum at the end of the day. But the signs for me aren't quite there yet. And this is also backed up by data. So this is an interesting post by Nick here. He says he's seeing the 2021 fractals popping up again, as they do every single time we form a swing high. The reason we topped the way we did in 21 was because the business cycle had already topped out and on-chain derivatives were historically euphoric, and then we entered a liquidity negative environment. Perfect recipe for prolonged risk off. Looks nothing like that here, in my opinion. Weekly view and daily view below. And I think it's very clear that we haven't reached the top for the business cycle. I mean, stocks keep making new all-time highs. We're getting rate cuts. M2 keeps going up. Trump wants to lower rates even further and pump markets. We've got quantitative easing next year. So although we're heading towards that, and we are late stage overall, if you want to take the overall cycle from the 2022 bottom, I don't think that the market has squeezed all of the juice out yet, considering that we aren't at the end of the business cycle, most likely, and the leverage and euphoria built up in the market isn't what you would typically expect from a top. So even though it might be a local top, if you want to look at the PA, maybe just based on prior timeframes that we've ranged, which has been 16 days, 20 days, maybe we've locally topped for 20 days, but I do think heading into September, October, we do end up testing those highs again. It could happen sooner than later as well, but just being realistic based on the timeframes that Bitcoin and Ethereum typically take to consolidate, and I do think, generally speaking, ETH needed to consolidate after a massive run. Keep in mind, August, although we had a very fun start to August, which made a lot of people think that things were crazy and got really excited. August is typically a pretty low volatility month for equities, for crypto. It's considered to be like the ghost month, right? Where volatility just really dies down. So although we didn't see that in the first week of August, I think the reality is starting to set in, which in the scheme of things is relatively normal. What's also relatively normal is the fact that, and this is a pretty crazy stat that I discovered today, in month 6 of the pump, Bitcoin has had a bear trap hit pretty much every single time, which is pretty crazy. So that seems to be the time frame from the Bitcoin breakout to the first like big bull market correction that Bitcoin has a cooldown. And this time frame typically exhibits chop in the market, and that's what we've seen. We've seen a big run up and then chop. I think the only thing that's kind of placated how bearish this price action looks is Ethereum actually running on its own narrative. Because if Ethereum hadn't run with the whole ETH Treasury narrative, this would have sent altcoins spiraling down. But what's good is that Bitcoin dominance, largely being propped up by Ethereum, still looks okay. So the picture for alts is actually a lot better this time around. Obviously, what we need is Bitcoin to break to new highs to give the market, some more life again. But Becca makes a very good point here, and this is honestly something I agree with in terms of like how you strategize your decision making right now. He says, there's no point to analyzing the price here too much. 99% here, including me, are not talented enough to time the market. All there is this. Is ETH still likely to go higher and start an alt run? Is the risk worth the reward? The answer, F yes. Turn your brain off and hold. So basically he's saying there, like, do you think Ethereum's making new highs? If the answer is yes, then hold. Or I guess by extension of that, buy more. So I guess the question that you have to ask yourself is, do you think ETH and Bitcoin have put in their highs? Ultimately, you don't need to chop yourself up too much in this environment. Of course, on pumps, you could risk off a little bit if you're really low on stables. I'm a big fan of holding stables in this market because I love having liquidity to trade with. Even the trade that I'll share with you in a couple of minutes here that I took here today, that was, because I had liquidity. So I still think it's important to protect yourself and give yourself opportunity through liquidity, but I don't think it's the time to be scared right now. I still think dips are, generally speaking, for buying on a macro perspective until the overall regime, the overall trend of the market fully ends. So I think this is actually a good tweet from Becca. We saw Eric Trump as well saying buy the dips. So we still know the Trump family is cooking and they're still pushing for the space and obviously pushing for rates to come down as well. And then the other thing propelling markets beyond the general risk-on appetite of the stock market and the macro cycle in general is the ETH Treasury bid, which, okay, Sailor has slowed down a little bit. We have seen that MicroStrategy has started to slow down a little bit, but I don't think Tom Lee has done buying just yet. Obviously, there was a big front running of that narrative and that pushed the ETH price up really quick. But I expect this trend for ETH and eventually Solana will just keep creeping to the upside, which should put enough buy pressure on the market to give it that nice underpinning for the next leg. And I think this will be the trigger for ETH hitting highs eventually. I mean, I think there's $27 billion of capital still sitting on the sidelines waiting to buy Ethereum through these treasury vehicles. So that is buy pressure that we just haven't seen before. And this buy pressure is being met by a lot of perp shorters. So it's interesting that a lot of people are taking on the futures markets, like the opposite bet on ETH, trying to time the top. We're seeing ETH net shorts increasing quite rapidly, which in my opinion creates an interesting storm for a short squeeze. This is stupid, by the way. Like imagine shorting Ethereum whilst you have treasury companies buying. Like these are just bound to get blown out in my opinion. So there's definitely a chance for a big squeeze, and that's probably also what pushes ETH above highs, because even looking at the ETH chart, it's quite clear that people were quite keen to come in and short that push into prior highs. And I'd say that it wasn't just spot selling, it was also the shorters coming in and defending that level that created this wick to the downside. But if you go into the monthly candle, like this doesn't look too bad. I mean, it's still a pretty strong monthly candle, and you would expect this gap to fill at some point by the end of the month, even if we do chop for a little bit. So I think it's only a matter of time, ultimately, till ETH makes new highs, which, the whole Becca logic of the video comes into play here. But let's go into my game plan now, because although I think ETH still makes new highs, and although I'm definitely interested in maximizing this period in the cycle, and I'm taking a lot of opportunities to do so, I did post a kind of reflective update in my Discord over the weekend that I wanted to share with you because, I think it's also important to maintain a level head and actually reflect on where we are in the cycle and instead of getting carried away. So I said this weekend's been my first time I've had space to think in a while, given how crazy everything was last week. Here are my reflections on where we sit overall. The good news, it's hard to be bearish overall when the backdrop for Bitcoin is still so bullish. Macro flows, institutional positioning, and the broader sentiment continues to provide a strong foundation for the market. On ETH, we don't know when the Tom Lee buying will end. It's definitely mid to late stage overall, but it's not over yet, in my opinion. That dynamic alone makes ETH feel destined for new highs, especially if Bitcoin keeps grinding up. The reason you can't write off alt season, and we know alt season is different this time around, it's very clear by now if you've been watching the channel, but the reason you can't write off alt season is simple. If ETH and Bitcoin make new highs, speculative capital will follow. That's exactly what we've been seeing over the past few weeks. But I think the main difference this cycle is that the speculative capital isn't happening through that traditional flow of funds. It's happening more on a speculative basis. So instead of rich Bitcoin whales cycling down to alts on an exchange like we previously saw due to ETFs and Treasury companies and stocks bidding the price up, you're not seeing that direct retail flow. Because a lot of people that got really rich off Bitcoin and Ethereum this cycle, or a lot of people that are trading it, they're not even in the altcoin trenches. I feel like that market is completely separated. I feel like the altcoin contingent is less interested in Bitcoin and ETH than ever. I mean, we're seeing that on the timeline. Bitcoin and ETH can be at all-time highs. The timeline could be depressed if alts aren't going up. So there's a massive discrepancy and a disconnect between those two camps now, which makes the connection between that rotation less. But it still exists because we even saw this last week when ETH pumps, alts pump. But they pump there definitely is a wealth effect, 100%. I've said that in the past, but it's not a strong rotational effect like we've seen in previous cycles. That is, I think, the key difference. So if there's not as strong of a rotational effect, what does that create? Well, it creates more of a narrative-based altcoin market. So speculative capital is still willing to go into alts that have the right narrative, but it's not rotating into the broader market in general. And if it is, there's there's too many altcoins, there's so much dispersion that it's not pumping everything up. So I think a natural reaction to this in terms of portfolio positioning is holding less altcoins and trying to keep your core portfolio a bit smaller and actually ramping up a little bit more on the trading side or the short to mid-term side. And that's something I've done with my portfolio. Obviously, I keep half of my portfolio in long-term and high conviction assets, but half is in shorter-term swing trades, opportunistic trades. There'll be times where I cycle more into stables. As you can see here, I said that over the weekend in my Discord, I took some profits off the table to balance out my new positions. Like my link position, ENA, Pengu, some of my new trades, because it would be stupid of me just to blindly increase net exposure and not rebalancing. And that goes back to the whole strategy at this stage of the cycle. If you do think we are heading towards later in the cycle, then you don't want to actually be deploying fresh stables here, generally speaking. You want to typically actually be dialing down the amount of stables that you deploy, but upping the risk. And the upped risk in your trades and your trading approach with less capital gives you high beta exposure to the upside of this last phase in the cycle without risking what you've already built. And that's definitely where I am. Even if you haven't feel like you've built the ultimate portfolio yet, and maybe it's even still underwater from your portfolio high, or you're just not happy with where you are, I still don't think that's an excuse to play the Hail Mary game, because there's still going to be lots of opportunities in this space long term, and you don't want to blow yourself up before we get there. So going really risk on 100%, 90%, even 85%, I'd say anything over 80% deployment into the market, I think that's a risky aim. I still think you need stables to capitalize on all the opportunities in the market overall. So those are some of the thoughts I dropped in Discord over the weekend. Luckily, I do mention at the end here, I took some new positions recently. So Pengu, Link, ENA, I'm going to go through some of those now. And I sold some other stuff, not anything in particular, mostly just taking haircuts over some of my existing positions to fund my new positions. So what I'm trying not to get in the trap of doing is I had this great Chainlink breakout play at $19, but I didn't want to take that play and then deplete my stablecoin balance and then not top it up. You have to find money from somewhere. You can't just keep deploying stables willy-nilly, or you'll just end up running into 100% exposure by accident. And I'm still trying to maintain 40 to 50% stables to open up the doors for these opportunities, because I didn't know I was going to take a Link breakout trade 2 weeks ago. Then the opportunity came and I took it. So I needed liquidity to take that opportunity, which is why my default position right now is to be a little more liquid in the market. And Link has been just carrying my portfolio. It's been a great trade so far, because I got in with size, spot, as I mentioned in last week's show. So that's been really good, and I think this will go higher. I still think it can 2 to 3x, honestly, if Ethereum makes new highs, but you can play it off this channel. Just like Bitcoin right now is in a descending channel, Link is in an ascending channel. So actually, Link's PA looks a lot better than Bitcoin right now, but that is on a weekly time frame, so just keep that in mind. Now going through some position updates, rapid fire. Pengu, I added Pengu. This is at a demand zone. Now, I probably will cut this position if it does break below, because this is kind of the level you want to see a reaction. But if you're going to beat any level, this is the level. Daily money noodle, confluence with the horizontal level, very strong meme in the market. This is the spot to add. I added spot, but then I also have an adjacent smaller leverage trade just for fun that I opened today. I'm playing around with this account. It's already $500 up. These are the updates, by the way, on the positions I showed last week. Overall, I think, net down slightly. I did TP spot on the bounce, so net I did protect myself, but in terms of the leverage positions, I just decided to leave them, so I didn't touch them, so technically I'm down on them. But Link did carry. Obviously, that's up 5.2k, so that's offsetting the 3.6k loss on Ethereum and the small loss on ENA. But the good thing is my liquidations are much lower, so I kind of built that on purpose with enough leverage and enough margin to be able to weather this storm and, hold these positions for multi-week if I have to. So we'll keep checking back in on them, but I'm not quite worried, and I added Pengu today. You might notice that my Ethereum position is much bigger. It's now 138k. It was, I think, 40k last week, or maybe 50 or 60, because I added another 70k to that position today when it wicked down into this zone that corresponded with this level on Bitcoin. I think it was 4,300 on ETH, something like that. It's already 4,350. So I added more to that position, and that's also helped balance out the losses a little bit. But that is, the liquidation price on that's 3,500, and my invalidation for this risk on season in general is like 4k ETH. So we got bigger problems if that goes below 4k. So I'm happy to hold that as well. Another position that I'm looking at adding, because I want to keep you updated with stuff that I will add, is Mu. This is almost back down in a buy zone for me. The buy zone is between 0.0027 and 285. This would be a higher low on this upwards channel that it's also making. So the channels in this market, the trends in this market are what you want to be playing, and this is coming towards the bottom of its trend. It's got clear and val below as well. So this is a play that that I'm adding. I've got my limit order set on Blofin, so that is the trade I'll be taking. I think fundamentally it's an interesting play. The reason I'm looking at it over other memes is because they've got some big stuff launching with their TV series, and they've got some very cool pop-up stores and just very cool art and all sorts of stuff they're doing. So they continue to push forward with their own IP. Not many other memes are doing that. Only I see Pengu's doing that. There aren't many, honestly. A lot of these Solana like meme teams have just given up. So this is my, I guess, meme coin risk on Solana bet that I'll add when I get opportunities. And if you are trading on BitGet, by the way, we have a very, very cool thing that we're starting tomorrow. I'm going to start airdropping accounts live on the show. So we're going to get a spreadsheet of all the recent UIDs that have signed up in this latest campaign. And then tomorrow, I'm literally just going to airdrop people money live on the show. I guess I'm not live, but it goes out literally 20 minutes after I record anyway. So if you do want to participate in that, that is going to be tomorrow, but you also have a pretty sick deposit bonus that you can get for signing up to a new account. So there's still a few spots left in this. It's a $1,000 deposit bonus, but it's actually quite attractive because if you deposit $100, you get $20 to trade with. So it's a futures bonus. You can go and open trades straight with that money. The next reward is $100 for a $500 deposit. So these are pretty good percentages. Very competitive with other exchanges, if not much better actually. Net deposit $1,000, you get $200, and if you deposit $2,500, you get $500, and if you deposit $10K, you get $1,000. So I'd say the best value just based on percentages is this one here. Deposit $2,500, get $500 worth of a futures bonus. I mean, what you could do is, just deposit, open a trade, and then take your money out. But of course, I mean, maybe Blofin shouldn't watch this because they probably wouldn't want me saying that. But yeah, obviously you can play those games if you want. But nonetheless, if you sign up using the link in the description, you will not only get access to these deposit bonuses, but tomorrow, watch the show because I'll be giving away some money live. That's going to be very, very fun. And then the other reminder I want to give you is to join my free Telegram, link in the description below, for daily distilled market updates, especially if you're time poor. One day you don't have time to watch the show, at least, I can have a touch point with you. So I'll see you in the next video. Thank you very much for supporting the content. We'll be back tomorrow. after another day of the news cycle, and I'm sure the market's going to heat up later in the week after a little bit of a lull. See you guys later. Peace out.